My name is Jason Choi. I am the co-founder of an angel fund called Tangent. At the end, there was only about $9 million in assets under management, half of which was from the partners. It was like a magical moment. As my first pitch, I think that went out to be a 3x afterwards. At that time, I think there was only 2 funds in the world. So over kind of those 2 years, I think I talked to maybe 400 or 500 different founders just in DeFi alone. So that ended up being a really interesting product that was only possible in crypto.
A thesis needs time to develop sometimes.
Just get yourself out there and don't be afraid to be wrong. And we've managed to about 4x our capital in about 1.5 years just from performance. Yeah, because I think one of the biggest ailments of the space is over allocation of capital. And one of the most reliable indicators for success for a crypto community is you make your community rich. I'm a very competitive person, but I don't like to compete.
I think you've built a powerful brand at the very least. Obviously controversial, blow up risk.
If we're wrong, so be it.
Hey, welcome Jason to the podcast. I'm excited for this one because we're turning the microphones on you now. The interviewer becomes the interviewee. But first, I'll have you introduce yourself to the podcast.
Thanks for having me, Jack. I'm really excited for this. So my name is Jason Choi. I am the co-founder of an angel fund called Tangent. So we invest across the entire lifecycle for founders in crypto, all the way from the first check all the way to the liquid markets. On the side, I've also been hosting a podcast with crypto founders, I think almost every week now since 2018, called The Block Crunch. And we also have a newsletter where we write research reports with a bunch of analysts around the world. So yeah, those are my 2 big preoccupations right now.
Excellent. Looking at your LinkedIn profile, Black Crunch seems to be the first thing. Whether I'm not sure if it was the podcast or the research component. When did you start that? Why did you start that? Is that the first thing you did in crypto?
Yeah, I think it was one of the first things I did. When I first got into crypto, it was 2017 when I was participating as a retail, right? And I was trying to read every single white paper. So guys who are around, you remember things like Ryblock's, very kind of OG white papers. And once I ran out of things to read, I realized the only way for me to learn is to talk to people in the space. But back then, I was just out of college, and it wasn't easy to get people on the phone, right? If you're managing a $100 million fund, you don't have any time to just talk to random college grads. So I created this new scam, which is a podcast to get people to come on the show and talk to me for, I think at that time it was 20, 30 minutes just to teach me about crypto. And in exchange, I get to show them to an audience that I don't have yet. But I was really, really grateful for some of the first guests that came on. So guys like Adam Draper, he was the first who ever said yes. So he runs Boost VC, which is a sci-fi focused VC fund, and one of the main arms was crypto. And then Chris Berniski was one of the very early guests as well. Melton Demiris. So it kind of just like ballooned from there with the OGs of crypto who were very, very generous with their times. And over time, it just became a tool that is a good way for me to meet people. So I actually met my first boss when I was working for one of the first crypto funds in Asia called Spartan Capital that way.
Right.
So he was a listener of the Block Crunch podcast. I met up with him when I went back to Hong Kong and turned it into my first job. And even today, a lot of people reach out and say, hey, I'm a founder. I listen to the podcast. I get a lot of tips in terms of how I should ship my project and lessons from previous products that you've talked about. So yeah, so to this day, I'm still doing it. It's a great passion project of mine, and it helps on the investment side as well.
Right. Yeah, I've noticed that you tend to pick up on really early narratives with the podcast, and we can get into that a little bit later. As far as the research component, when did that begin, and how was that kind of born?
Yeah, so the podcast comes with a newsletter that is a paid newsletter. So a lot of people ask, if you're already running a fund, like why do you need to make money from a paid newsletter? So I actually don't make a single dollar from the newsletter. Every single dollar I make from the newsletter goes back into hiring a group of analysts. And the entire point for that is, number one, people asked for deeper analysis of projects instead of just an interview with a founder. So this was one way to kind of answer that. Number two, I've realized it's a really good way to find new analysts, because for crypto, it's not exactly the same as TradFi in that you have very established talent pipelines, right? You go to you go to kind of specific schools to find people who want to be bankers and consultants, but in crypto, there's really no pipeline. So I wanted to create my own pipeline of people who want to be in the investment space for crypto, and I managed to get a hold of some of the sharpest folks very, very early on in their careers. So for instance, one of the guys we brought on as the first contributor to the newsletter, Javier, he was brought on as a paid contributor on the newsletter. where he writes kind of 30-page research reports like twice a month. And then now he's an analyst at Defiance Capital, one of the larger funds in Asia. Wow. And then another person, Ian, who joined us as well, also as a paid contributor for, I think, about a year. Now he's actually full-time with us at Tangent as well, which we're going to announce pretty soon.
Cool. Yeah, that's interesting. And it kind of mirrors your trajectory as well, where you kind of started out just analyzing stuff for yourself and then ended up at Spartan Group. So you mentioned a little bit about Spartan Group and how you started out there. What was your trajectory there? What did it look like when you started at Spartan Group? What did Spartan Group look like? Because I know they've grown from like 10 million to several billion, I think.
Yeah, so back when I first joined, my boss at the time is Kelvin. He's on Twitter as well. And he spent, I think, 2 decades in TradFi, right, as a partner in Goldman Sachs. So back then, when you look across the entire arena in the Asia crypto investment space, I couldn't find anyone with that type of investment pedigree. And he was also a CIO at a massive hedge fund for 2 years. So I really wanted to learn the investment game, and I thought this person had the best profile for it. And Kelvin has been an incredible mentor of mine. So with Spartan at that time, it was a very experimental idea because we were launching a long-short crypto hedge fund in 2018. There were barely any instruments for you to go short, and the investment universe was like 100 coins versus thousands today. So it wasn't an easy sell to LPs, and it wasn't really a venture fund either. Right, we're not really doing any venture deals. We are mostly just focused on trading liquid markets. So it was a very hard sell. I think at the end, there was only about $9 million in assets under management, half of which was from the partners. So it's a very, very tiny experiment. But over the years, I think in the 4 years, we might manage to nail a few bets very well, managed to time the cycle quite well as well. So we managed to kind of increase that assets under management. I think by the time I left, it was around $500 million. So it became one of the larger funds in Asia. And I think keep in mind that in Asia, there are no kind of massive endowments in the sense that they have it in the United States. So for a fund of that size was actually quite an incredible feat. So that was kind of the journey there over the 4 years. I was brought on as the first analyst in Hong Kong. So it was me and Kelvin in a co-working space. And then over time, I got promoted to head of research, where I helmed the research team with some of the sharpest people I've worked with. And then afterwards, I got promoted to general partner, where we were also kind of helming the venture funds that we subsequently raised.
What kind of work were you doing right at the beginning there? Kind of just this small liquid stuff, especially 2018, the crypto market. I don't know at what point you came on in 2018, but the crypto market had experienced this kind of, contraction. So what was your day-to-day like there?
Yeah, so in the beginning, it was thesis formation because there was really no defined verticals yet, right? This is after 2017 ICO bubble, where most of the things were vaporware. And then we're trying to figure out, okay, what is actually real here? And I remember the first project that really got me excited was Maker. And back then, MakerDAO was not a very easy product to use. Every single click was an on-chain transaction, and they have specific names for every single different action as well. There's like you boost your DAI to bump your stablecoins or whatever. So it was a very clunky experience. But when you actually get to mint the stablecoin DAI backed by ETH, it was like a magical moment because you didn't need to sign up for anything. It was the first kind of DeFi red pill moment for me. So one of the first pitches that I did, I remember, was Kyber Network. And I was very proud of that because as my first pitch, I think that went up to be a 3x afterwards. And the process for that was really trying to first understand what is a DEX, because back then there was not so much literature on it. Who would use a DEX? What are the volumes they're doing? Are they making any fees off this? And then just kind of building DCFs and kind of comp tables. Very trying to TradFi approach, which we evolved later on to be more crypto native. But keep in mind, this is before any of the platforms were live. So there's no like token terminal. Masari was barely live. So a lot of that early work was just researching and figuring out what these projects even do, and then trying to build some models for them to figure out, okay, what is the right valuation for this?
Right. And then how did that approach turn into kind of venture? When did that come about, and how did you make that transition over into venture?
Yeah, so as you know, the majority of the fund was of my career in Spartan was actually on the liquid side, and then I think the second half of that career was on the venture side, more on the venture side, and I think a lot of that realization was because we realized as we were researching the DeFi protocols that there's a lot of opportunities that are not tackled and projects have not been built yet. And at the same time, as a function of being in the space so early, we started to get in touch with founders and kind of started to build a network. And we started to see newer founders start projects as well, which we could not invest in with the liquid fund just by mandate, because the mandate was, to participate in liquid markets, not to do venture deals. So because of that, we decided to start a DeFi-only venture fund. At that time, I think there was only 2 funds in the world that only focused on DeFi. So that was Spartan's DeFi Venture Fund, and there was also Defiance Capital, which is mostly focused on DeFi. So both of us were in Asia. So over time, I just kind of started to get pulled more and more into that DeFi fund and started to work with more founders. So over the kind of those 2 years, I think I talked to maybe 400 or 500 different founders just in DeFi alone. So build a massive network and saw a lot of things both work and didn't work. So I carry a lot of those lessons to what I'm doing now.
Interesting. Yeah. What did the DeFi or venture space even look like in those days? Because I think now we have kind of conventions and we have, ideas of tier 1, tier 2, tier 3 VCs. Was all of that, was kind of like the infrastructure part of your work? Because people didn't know, the structure of a SAFT or a token warrant might not have existed. Was that all a challenge in that day?
Yeah, there was a lot of kind of first principles thinking because there was no standardized. There was the concept of a SAFT, but the conventions around SAFTs, like what the vesting schedule should be, what is the percentage for investors and for communities, and let alone incentives, right? So right now, everybody knows you need to do an airdrop or like some sort of back then pool 2 liquidative incentive, but there was no kind of convention or precedent to go off of. So you have to kind of workshop with founders from a lot of first principles. In terms of the deals that we did, I think we were constantly trying to push the frontiers, trying to see what are new 0 to 1 type of investments that we can make. So one of the big bets we did was Alpha. So they built one of the first levered vaults in DeFi. So that ended up being a really interesting product that was only possible in crypto. And then we're also quite early investors in DYDX as well. This is before everybody kind of knew about them. Right. So we also did a lot of kind of interest rate swap stuff. Funnily enough, we also did Pendle, but we definitely didn't foresee the entire points meta being the thing that took off. We were basically just thinking, okay, now we have the lending built out, we have the exchanges built out. It makes sense for us to move on to more complex products like interest rate swaps. So yeah, it really kind of spanned the entire gamut, and it was really fun.
Yeah, that's interesting. And yeah, Pendle... It's interesting. Pendle has been in existence for a long time. I think they raised their first round in like 2018 or 2019, and only now is it coming to light. But yeah, I think they kind of speak to the idea of a thesis needs time to develop sometimes, especially in an early crypto or in a kind of early space like crypto. So just because your product isn't taking off yet doesn't mean that something in the same space can't work as the space matures around it. So this was all kind of new experience for you at Spartan Group. To someone else who's early in their career, a young analyst or someone who's just looking to get in the space, what advice would you give to that kind of person?
Yeah, I think for me, I've always actually, even before Spartan, I had an interest in venture. So I was helping start out a Web2 fund back in my college days called Contrary Capital. So I managed to kind of start to sharpen my teeth a little bit there. So for young analysts who are, say still in university, they're trying to get started in crypto, I would recommend getting started in university instead of waiting for your first job. Let's say you're out of school already and you're trying to pivot into crypto. I think there's 2 things you can do. There's 2 things that scale. One is code. So if you can contribute to a protocol, if you can contribute to an open source project, I do it. The other is content. If you don't know how to code, then write content to explain projects to people, to educate people on different kind of crypto trends and thesis. Just get yourself out there and don't be afraid to be wrong. I think those are probably the 2 biggest bang for buck for people just starting out.
Right. And then as you shifted into other things beyond Spartan Group, you kind of had the opportunity for liquid and venture. I think you mentioned Tangent does do liquid stuff on the liquid side and on the venture side, but a lot of what I see, a lot of your portfolio were venture bets, especially a lot of the high profile stuff. So looking at stuff like Athena, Say Network, Layer Zero, pre-token, Dune Analytics, Drift, Eigenlayer, pre-token. When you kind of had the decision to move focus towards venture or focus towards liquid, why did you end up making the decision you made?
Yeah, so I guess to clarify for Tangent, we are really a kind of, since we're prop fund, so we don't have external investors. It's myself and my co-founder, Darrow's Capital. So we really don't have any mandates in terms of what we invest in. We try to think from first principles, basically from both a top-down and bottoms-up. So what I mean by that is from a top-down perspective, what do we think makes sense in crypto? And we try to look for companies that do that. And if it happens to already have a liquid token, we'll buy it there. If it happens to be a venture deal, we'll do it there. And then from bottoms up as well, if we come across a founder, we do our DD on them, and we think that, hey, this is a very credible founder, and we think they will amount to something. Or if we see a project on CoinGecko and we think, hey, this project seems to be undervalued, we'll do our research there, and we can also buy assets, whether it's on the venture or liquid side. So actually, majority of the profits, because we are only our second year into our existence, so most of the venture bets have not vested yet, almost all of the profits are generated on the liquid side, and we've managed to about 4x our capital in about 1.5 years just from performance. Wow. And when we kind of picked what direction to go, it was we started only with venture in the beginning because it was lower commitment. I was trying to, back then my co-founder Darrow has not worked with me yet, and I haven't worked with him yet. So for us to kind of work together in a non-committal way for about a year, just to kind of suss each other out a little bit, understand what our strengths are. We were just co-investing as angels. And then as we built that trust, and as we lived through our non-competes as well, after that we decided to pool capital together and kind of do this more holistic strategy.
Yeah, I guess really we should back up a little to the end of your time at Spartan Group and then what happened after that to end up at Tangent. So can you talk a little bit about that?
Yeah, so I think this is around early 2022. So in late 2021, I was basically trying to study the cycle and understand what is going on. And to me, there were a lot of heuristics that were flagging, calling for a market top, especially the euphoria in things like metaverses and a lot of the mainstream grift that was happening, which made me kind of realize, okay, it seems like we've run out of marginal buyers and the adoption is not catching up to the valuations. So I actually made a conscious decision to sell everything myself and basically take a break from the space. At that time, I also was considering kind of maybe exploring building a project or joining a project. And I thought 4 years was a good run at Spartan. So I decided to step down around early 2022 and just kind of focus on angel investing a bit. And then in that process, I came across Darrow, my co-founder, and we have a bunch of friends who are founders in this space. So these are guys like Sam Kazemian, the founder of Frax, guys who are Gabby, the founder of YGG, one of the largest gaming guilds, Mabel, who is now one of the head people at StepIn, one of the largest consumer apps of last cycle. So we have a couple of folks that we know are good operators that were also angel investing. So we just started this kind of collective, not a DAO, but more just like a group chat where I just share all our deal flow with them and co-invest together. And then after about 6 months of doing that, we realized that actually we have a bunch of spare capital sitting around, not doing anything. And we have that training and alpha to, I think, reliably create profits with our own kind of discretionary strategy. So we started dabbling a little bit in liquid markets as well. And then after a full year of just trying this model, we decided to pool capital together, and that became Tangent as it is known today.
Mm-hmm. And then Tangent obviously has this really unique structure where it's prop capital working with multiple angels. Why choose that? Someone of your pedigree, I think, could easily raise a fund. Why did you go after the structure you ended up choosing?
Yeah, because I think one of the biggest ailments of the space is over allocation of capital. There's way too much capital chasing too little deals, and there are multiple consequences from that. So number one is it becomes very PvP. You fight with different funds to bid up valuations in private markets to unsustainable highs. And when the tokens finally come to market, they are at such a space that they're at such a price that there's no alpha left for retails to buy. And one of the most reliable indicators for success for a crypto community is you make your community rich. But if your community is buying a token at 10 billion at listing, there's really no way to do it. There's no way to kind of create wealth for a community. So for me, I thought, okay, I don't want to be contributing to that problem. That's kind of how we started. And then I think the second part of that was also just recognizing opportunity. I'm a very competitive person, but I don't like to compete. Like I saw that there was a massive opportunity in the early pre-seed to seed stage that the big funds that just can't even participate in because it's too small, right? If your minimum check size is $5 million and the entire round is $1 million, no one's going to talk to you. But unfortunately, I think that's actually the time that founders need the most hand-holding. And because I have that network and Darrow has that network and experience from our past 4 years of working in two of the largest funds in Asia, I think we managed to be very kind of trusted confidant to a lot of the early stage projects that we got involved with early on. And it just kind of ballooned from there, and we decided to craft a niche for ourselves. And in order to kind of hold ourselves to the standard that we want, which is we're going to be probably one of the smaller checks on the venture side, but we're going to deliver the most bang for buck per dollar, we cap ourselves at 10 projects a year. So so obviously our liquid portfolio could churn a bit, and we could invest in hundreds of assets over the cycle. But for the venture portfolio, where we stick with you for the long term, it's no more than 10 teams. I think this year is probably like 5 teams. So that way, whenever our founders have anything they want, we're the first people they call for advice. And I think that is not the most scalable model, but it's something that I think fits in with our philosophy. And I do think the brand equity you can get from that will compound over time too.
Yeah, I think that's absolutely the case. And you guys punch well above your weight class just in terms of kind of reputation. There are people managing what I assume to be a lot more capital, but Tangent, continues to have this kind of name brand recognition in this space. So I think you've built a powerful brand at the very least, and obviously that can grow into something much, much bigger someday. I'd love to talk about a couple investments that Tangent has made. At what stage you found them, and what the thesis was around that, what kind of, how you engaged with the founders, questions like that. Just because you guys, as I mentioned previously, some of your portfolio companies are really showing their cards in this cycle, and they've ended up being like huge kind of narratives in this space. So talk a little bit about like Eigenlayer first. How did that come about, and what was your thesis there?
Yeah, I think whenever there is controversy around a product, like a lot of people disagree on whether the product would work or whether it is a useful product, I think I start to pay attention. That doesn't mean we invest right away, but we try to pay attention because it's causing it's clearly relevant enough for people to debate. And Eigenlayer was one of those, because a lot of people were discussing the dangers of restaking and mistaking it for rehypothecation. They think it's big blow up risk in crypto. And when we dug into it, we realized actually there's a big difference between rehypothecation and restaking, which Eigenlayer was focusing on at that time. And I actually did an interview with Sriram, the founder, on this as well. And then as we dug into it, I thought it made a lot of sense. This concept of kind of shared security, which I've seen implemented in Polkadot and Cosmos way back in like 2019. And I was very bullish on that model, but it was just a wrong execution for Polkadot. And I thought, okay, this concept being brought to Ethereum makes a lot of sense. And that was really it. That was kind of the thesis there. And then we got to meet with the founder, Sriram. And I think just from those conversations, we also understood that he's visionary. And yeah, so through that experience, it was a pretty clear bet for us.
Right. What about Athena? Obviously controversial, blow up risk. You guys are an early investor. How did that come about?
Yeah, so Athena, I think we've seen this concept built before last cycle with multiple other projects. I think there's one called UXD on Solana,
Right.
but the pitfall for them was they were using DeFi rails. So the OI limit on kind of perp dexes was a big constraint. I think the latency for liquidations is a big constraint as well. So they were really not built to scale. So I really was fond of the idea of this kind of delta neutral backed internet bond, which people perceive to be a stable coin, but it really isn't. And I was looking for an idea that could scale better than what came before. So Athena made a really interesting trade-off in that they use centralized exchanges, they use centralized custody, but their decentralization comes from kind of putting their funds across a selection of centralized exchanges and trying to, at the same time, remaining transparent with how much assets they have in the kind of MPC custody. So they are leaning slightly more towards the centralization side, and the gain they have from that is the scalability of it. And it proved out that they made the right trade-off, because now it's 100x the size that any of the previous experiments were at. So fundamentally, the idea made a lot of sense to me. And then speaking to Guy, the founder, multiple times and doing multiple ref checks on him with people he worked with before also gave me the conviction that this guy is not just one of those ideologues that write white papers and just talk about ideas. He actually knows how to get shit done. He knows how to distribute. And to me, distribution, the ability to kind of hustle, is very, very underestimated in crypto. So when I saw that, it was also a no-brainer. So it was actually the only bet where we did the seed. We did the follow-on. We provided liquidity, and we bought on liquid markets. And I remember Guy was telling us that we were one of the first to commit to provide liquidity, and relative to our check size, it was like the biggest liquidity that anyone's provided as well. So that is kind of what we try to embody, right? If we really believe in a project and founder, we support the entire way from seed to like liquid markets. If we're wrong, so be it. It's our own necks on the line. But we kind of ride or die with projects that we invest in.
It's interesting as well too, because you guys have this like very big breadth in your portfolio, whether it's interchain infrastructure with something like Layer 0, DeFi with something like Athena, something like NFT, or not NFT, but gaming with several projects, or even like DAO stuff, Seed Club, stuff like that. Do you see this breadth as a strength? Why do you choose to invest kind of across all sectors of crypto?
Yeah, so I think one of the mistakes you can make as a crypto investor is to be too vertical driven, because almost nobody predicted NFTs, right? Even if you were around to play around with crypto kitties, which I was. I bought a crypto kitty for my girlfriend back in, I think, 2017. I didn't foresee NFTs was going to be this big of a thing back in 2020. So I think kind of marrying yourself to trends is really, really bad. It's really deleterious for returns. So what we want to do is just be first principles driven, right? Is this thing solving a problem? Is this problem big enough? Is this team well equipped to do that? And that's it. And what you get is basically a plethora of verticals that you end up investing in. So it's not like we're deliberately trying to find, hey, let's do a D-pin bet here. Let's cover our bases with like BRCs. Let's cover our bases with NFTs. It's more just like completely first principles driven. And I think the through line with all of these is most of the projects we invest in have tokens. And, we're kind of token natives in the sense that we've played around with tokens, we invest in tokens, we trade tokens, we use dApps, we pay gas with tokens. So we're very kind of on-chain native. So a lot of the specific challenges that founders face, especially on the token side, are things that we can help answer that few others can. So including things such as like negotiating with market makers, negotiating with exchanges. We've seen those conversations happen hundreds of times before. So those are some of the things that we try to help across all of these verticals.
Right. And what does deal flow look like for you guys? Are you doing any outbound? Does it mostly come inbound?
It mostly comes inbound. It's actually founders asking for introductions to us with their lead funds. And there's a lot of inbounds as well, but the noise tends to be a little bit higher. So I think what I prioritize are warm referrals, especially from founders. So if I worked with a founder before and I'm really impressed by the founder and they refer someone to me, I'm going to pick up the phone immediately for this person. If it's like a cold DM on Twitter, I might take a look at the deck, but I think there's a bit too much noise there. But if it's from a fund that we love working with and they refer a project to us and they say, hey, we think you can help these guys with APAC region, then we also take a very serious look. So yeah, there are some funds that we tend to co-invest with quite a bit just because our thesis overlap. I think Dragonfly is one of them. I have a lot of respect for the folks there. And our thesis just happened to overlap quite a bit.
The other trend I've seen at Tangent and with your podcast as well is this kind of tendency to be quite early on things. So Layer 0 in November 2021 came out on your podcast. This is pre-Stargate. I think a lot of people weren't familiar with Layer 0 at that time. Celestia, February 2022. Obviously, that's so, or maybe I guess a little less than a year before token launch, but still, again, early. And then Athena in December 2023, pre-token again. How do you end up early to these projects?
Yeah, I think one of the things that I really am religious about is running away from trends for any investment with a horizon of 2 years or above. So any venture investment in crypto, I think if you try to abide by trends, you lose money. So if you invest in crypto AI when the crypto AI hype was the highest, you might still make money, but I think there was so much noise and vaporware. So I try to go to things that no one is looking at. So right now that's apps. I don't think a lot of people are looking at apps, though maybe more recently, a lot of people are starting to talk about social fi now. So back then, nobody knew what data availability was. So actually, back at Spartan, we invested in Celestia before it was called Celestia. And it was a very similar kind of first principles driven approach where we got to talk to the founder, Mustafa, and it was very, very kind of founder driven in that hey, we think this founder is really sharp. He's tackling a problem that's big enough, and we think he's competent enough to do this. And that was it. That was really it. And in terms of how do we get in touch with these founders? How do we find these guys early on? I think it comes back to the network that we've built, right? With founders we've worked with before. That is why I take founder referrals very seriously, because I want every founder we've worked with, when they talk behind our backs, to have nothing but positive things to say. So that is what makes other founders also want to reach out to you, especially because sharp founders tend to congregate around sharp founders as well. So I think that was a big reason why we were able to have the fortune of meeting these founders very early on.
Right. Yeah, it's excellent. It's incredibly impressive just kind of reviewing every public, event you've made around specific projects, whether that's an investment or a podcast. And I'm looking through that and I'm like, man, this guy is good. I have a question. What do you consider to be your biggest victory in crypto? And with that, what was your biggest mistake or error or even failure?
I think the biggest victory, it's hard to pinpoint one specific bet. I think we have a few bets that played out quite well. But I think it's the fact that I started with a few $1,000s in crypto, and just through investing, actually mostly in the liquid markets and then some on the angel side. And we'll talk about my biggest loss and why most of this was from the liquid side. And I was able to kind of turn that into a fund where I can now hire 6 people. So I think that is probably the biggest victory, being able to be in a place where I get to work with who I think are probably some of the sharpest people in the entire space every single day, and just kind of having no constraints on the mandate and being able to play the markets however we want versus just a very kind of rigid type of structure. I think that is probably my biggest win. So starting Tangent, in short, I think is my biggest win. I think my biggest loss was actually we never invested in FTX just because there were a little bit of red flags back when I was a Spartan, but I did actually cash out all of my equity at Spartan when I was leaving and left it on FTX. So that money was supposed to go into Tangent as part of the kind of seed capital as well. But that's why subsequently most of the capital actually came from my own kind of personal investing and liquid markets, because all of that was lost in FTX. So I think that the big lessons for me there is kind of constantly do the positive EV thing. Because when I was seeing the headlines about FTX potentially becoming insolvent, there's really no downside to pulling your capital because if they don't go down, you just put your capital back on. But I was just in such a disbelief that I thought there's no way they're going to go down. I still ended up pulling quite a bit of capital, which went on to kind of seed Tangent. But then the chunk that was the equity that I sold for Spartan, I just left on there, and I wasn't able to pull it out on time. So maybe I'll get it back, but I think it was a good expensive lesson. So never again.
Emotionally, what was that like for you? I know, I'm curious. I think people are hesitant to talk about kind of big losses. Obviously, you're somewhat open to it. Was that a hard time, or did you kind of just say, back to the process, positive EV thing, get to the grind, let's lock in?
Yeah. So for me, I think I've managed my risk so that I was never in any place where I would be like, oh shit, I'm going to go bankrupt, right? But it was more just an emotional thing because I was in Hong Kong. So a lot of my social circle was also in Hong Kong. And as you may know, FTX was based in Hong Kong before they moved to the Bahamas. So I knew a lot of the guys who were, very senior in the team. And it was just this feeling of betrayal. And this kind of constant paranoia. Did they know? Did they not know? Are they lying to me? So that was like a very, I think it's a very disillusioning time in my career. And I was kind of reconsidering a lot of things that I thought about crypto as well. And then it took me some time to kind of rationalize that actually this is not an indictment of crypto. This FTX thing is an indictment of a specific person and the people who enabled him. And I'm very glad that, yes, I've made some bets in the past that, ended up being rucks. And, I was a victim of that. But I was glad at least that I did not participate in supporting this massive kind of thing that blew a hole in the industry. And I think, afterwards kind of made peace with some of the people there that, turns out they're victims as well. But I was very more angry than kind of sad with the whole thing. And that kind of motivated me to provide some sort of coverage on Twitter as well. Because I think the most tilting thing at that time was seeing mainstream media cover this event. And it was insane. It was like a parallel universe where a lot of the publications online seemed to almost have been bought off by SBF. Like every coverage was trying to put a positive spin to this thing. And I was just like, okay, this is bullshit. I know some of these guys. I think I kind of know what's happening, so let me tweet about this. So I read a thread about it, and to my very surprise, like Elon Musk was like retweeting and commenting, and Bill Ackman was like retweeting. So that managed to catch a lot of attention. So that was my little kind of moment of vindication where I felt like, okay, at least my voice is heard, and I'm able to share the part of the story that I think is true. So right now, obviously, there's a lot more proper investigation by like professional investigative journalists and a lot more books about the whole event. But at that time, I think that was kind of a moment for me where I felt like, as someone with some sort of minuscule following in the space, I felt like I had a responsibility to at least talk about what I think is happening versus what the kind of spiel they're trying to paint is.
Interesting. Did that affect kind of your network in the space? Do you kind of have now negative signal around people who might have been associated with stuff that you don't want to associate yourself with?
Yeah, for sure. I think I keep a list of people that I think are high integrity actors. And if you find the overlap between high integrity and high competence, then you really want to help these people because they're going to do great things. And I also have a separate list of just like low integrity people and people who are just you shouldn't waste your breath on. So that list grows every day, unfortunately. But I think it's a helpful heuristic to not waste your energy and time. So did that list grow longer during the FTX saga? Yes, definitely. But I'm glad to say that the former list is much longer than the latter.
Yeah, that's a hard one because sometimes, it can be profitable to align yourself, or maybe even not align, but to bet on low integrity founders or low integrity actors because in the short term it will be profitable. But lately, personally, I've come around to the fact that it's like, not only should I be doing this to make money, but I should also be, if I'm going to last in this space, this chaotic space that it feels like I age 1 year every week, I need to also be in an ethical mindset and a place that I can continue to work from and to say, I'm happy with what I'm doing in this space. I don't feel like I'm investing in like a ticker that sucks my soul, right? And I don't know. I just think that's an important mindset shift, and ultimately, I think it ends up being profitable in a lot of cases. So,
yeah, I think it's a long-term plus EV strategy as well, right? Because yes, you might make a few $100,000 from some sort of scam thing, but you hurt your brand. So that's the reason why a lot of the kind of tier 2, 3 funds, they get very shit deal flow, and they just keep getting shit deal flow because they're associated with that. So I don't ever want to be that. And I'm not saying that nothing I invest in has been a scam, right? So obviously there's been some lapses in DD, especially when you're investing a lot of capital where some things turn out to be, a rug, or the founders just turn out to be a soft rug. I think even Mark Cuban talked about being rugged on Shark Tank by one of the guys that pitched like a travel app or something. And then, 2 years later he checks in and that guy was like, oh yeah, I'm traveling myself. I'm not building this shit anymore. So that's definitely happened, a few times in my career. And every time I just got kind of so fucking disappointed in myself for my lack of judgment, and also the fact that I wasted all this time and effort on this. So I think it will still happen. But I try, I try my best to not invest in things that I think are not earnest.
Interesting. I didn't know this before this interview, but you cashed out close to the top in 2021. What are your predictions for the next year in crypto? Bullish, bearish? What inning are we in, maybe?
Oh boy, yeah, I hate making predictions because I'm always wrong. But my current bias is that we are in some sort of top already, and I talked about this on Twitter. The reason is, I think, in terms of the marginal buyers, I think we're at a point where we are running out of marginal buyers. And why I say that is, if you look at stablecoin inflows, they have remained pretty stagnant. And if you look at mainstream penetration, we've started to enter the celebrity grift coin phase. And at the same time, the innovation in the space, again, is not catching up with some of the kind of degeneracy that we're seeing. And it seems like this cycle, people have just kind of given up the idea that crypto is useful. They've just kind of skipped straight to memes. So there's definitely very PvP vibes instead of a PvE vibe, which I would characterize as everybody believes in a bigger dream. They actually want to support this thing. Right now, it's just, how do I take money from this other guy by selling to a greater fool? So that type of environment is not conducive to wealth creation. I think number two as well is I'm starting to see a lot of big venture funds being raised. So the last time I saw this was actually at the very top at 2021. So usually LPs and venture funds are trend followers. They want exposure to something because they start to pay attention to something, and they pay attention to something usually because prices have gone up quite a bit and they start to see it in Bloomberg. So maybe this time LPs are a bit more discerning, but there's definitely some pink flags that I'm seeing. And I think my bias would be invalidated by price, which is, I think crypto has been very reflexive. A lot of people say ETF flows are driving price for Bitcoin, but if you look at ETF flows and match it with price, sometimes it actually follows the price. So I think if Bitcoin reclaims some sort of level above 70K, 72K, maybe we get a reflexive upside again. The second scenario where I'll be invalidated is changing monetary environment. So I think there's a lot of talk about an easing monetary environment. And I do think that, historically, if you go back to 1990s for rate cuts, if you look at the performance of risk assets 12 months out from rate cuts, for the most part, they have been positive. I think on the 3-6 month horizons, they're a little bit more mixed. But I think that is probably another setup that would give us a leg up. But in the absence of both of those, I'm not too constructive on markets now. I know that's probably a controversial view. But who knows? Maybe by the time this episode comes out, I'm already invalidated and we're all back to bull end.
From a venture perspective, what does that relative bearishness mean for you? Do you kind of invest as normal, or do you think about the timing of these things?
Yeah, so I think the joke internally is that I'm always like bearish in the 3-6 month time frame, but I'm always bullish on the 10-year time frame. So for me, I try to do a little bit of market timing in that in bear markets, if I see founders that are still building, I know they tend to self-select for a specific type of founders, that they're in the space not to make a quick buck because they actually believe in the space. Because otherwise, why would you be working in this instead of AI, right? Why would you be working in the space when all the money is literally running out of the space? So 2023 was a great year for this, where everything, except for Bitcoin, was just kind of chopping around. Nobody's really around, and a lot of great teams were being formed in that time. So Athena being one of them. So in those type of environments, I do tend to get a bit more active. In bull markets, you tend to attract a lot more grifters, especially people with zero experience in a vertical that's very hot right now, where the coins in that vertical are going up. Usually that combination of founders are not great. And I've also noticed, I think I'm borrowing this from my good friend Richard Chen, Web 2 founders that come into Web 3 during bull markets tend to be a mixed bag. This is not to say there are no great founders that can come from Web 2 to Web 3 in a bull market. But in a bear market, they are absolute god tier signals. Like if you're leaving a cushy big tech job or giving up a really successful startup job in Web 2 and coming to Web 3 when everyone is leaving, you probably have that dog in you, and I want to back you.
That's funny because I remember talking to Mike Siligadzi from EtherFi in like January 2022, and he comes from an ed tech background, and he's been one of the success stories of the last couple of years. So interesting see that parallel. It's a funny signal. I think you're right. It's valuable. I want to play a little game where we ask on your opinion about a couple of things. It's called maybe this or that. The first question would be, and you can explain a little bit why in your logic. So the first one, Solana or Ethereum or other. We'll give you the or other option.
Yeah, it's a good one. I think for now, I've always been an ETH guy, right? I cut my teeth with ETH DeFi, but I think it's pretty undeniable that Solana is dominating a lot of the retail mindshare in terms of use cases. I still think the frontier can be pushed a bit. I think we can go faster. So we backed this project called MegaEth that is trying to build an instant finality chain, mostly focused on consumer-facing use cases. Mm-hmm. So I guess my cheat answer would be, just to show my backs a little bit, would be MegaEth.
Excellent. Memes or utility?
Yeah, I think the 100 IQ in me is always about utility. I appreciate memes, but I'm not great at playing them. Yeah, so all about utility.
Excellent. How about apps or infra?
Always apps. I think we have over-invested in infra, which is interesting because I just showed an infra project. But every time I make an infra project is from an application perspective. So for instance, when we invested in Say Network, they actually pitched themselves as a chain built specifically for you to build a FTX feature parity exchange. And no other chain allows you to do that. And for MegaEth, they pitched themselves, to us at least, specifically as something that allows you to build consumer use cases that were not possible before. So I do think the actual step to get out of this constant PvP-ness is to grow the pie. And you start to see examples of that with things like Pixels. Having 1 million daily active users, I don't think people even notice that. Yeah, sure, a lot of that might be bots, but the fact that you have hundreds of thousands of people every day playing something in crypto, I think would come as a surprise to a lot of people who are cynical about the space. So we want to find more applications like that and back them. So apps all the way.
Excellent. I feel the same way. US or Asia?
Oh, I don't want to get political. I'm based in Asia. I really enjoy my time in Asia. I think it's such a big market for crypto as well. If you look at most of the games, the people who were adopting Axie Infinity and now reactivated for Pixels, going back to that example, they're almost all in Southeast Asia. Majority of exchanges are based in Asia. A lot of the volume is coming from Asia. So I think one of my hypotheses is that a lot of the great products in crypto are built by very technical teams in the West, but a lot of the people who end up using them might be in Asia first. So yeah, I guess cheat answer is a little bit of both.
Excellent. How about founder or VC?
Founder of VC. Yeah, I think the space hates VCs, and I kind of get where they're coming from, but I do think VCs get unreasonable hate. Because I try to think about a single product in crypto except for Bitcoin and ETH that could have been around and succeeded without any venture funding, and I can't think of a single one. But if you go down the top kind of 100 list, I'm not talking about the rank 500 shitters. So I do think VCs actually, I think someone should write in defense of VCs. They got ripped apart on Twitter for sure, but I do think that VCs matter. But obviously the space is built by founders. So, and my entire job is around supporting founders. So yeah, founders come first.
Interesting. Yeah, and I think as far as the VC question goes, sure, there's ways that VCs can be extractive, but ultimately most founders make the decision to let VCs support. So that definitely says something about how necessary or useful VCs are in the space. Wrapping up, what does the future hold for you? Obviously, it seems like you're happy and definitely successful at Tangent. Do you want to continue to be public-facing? Have you ever thought about founding perhaps in the future?
No, I think Tangent is my life, basically. This is, I think, my legacy, and we want to build it into the best fund in Asia. So we're still kind of experimenting with what that means. Is that just crypto for the next 10 years? Is it frontier tech enabled by crypto? I think there's a lot of possibilities. So first order of priority is just finding the sharpest people we can work with and build that team. And we'll see what happens in a few years. Excellent. That's a great answer and a great point to wrap things up. Jason, thanks so much. It's been a really wonderful conversation. I've admired you from a long time from a distance as this kind of grinder, and I really, really appreciate your time. It's been a great conversation. Where can people find you?
Twitter, podcast, otherwise?
Yeah, no, appreciate it, Jack. Thanks for having me on. And if you want to reach out to me, you can find me on Twitter at Mr. Jason Choi. You can DM me, you can tweet at me. But if you're mean to me, I might block you.
Excellent. Thanks so much, Jason. I appreciate it.